Have you ever wondered what it meant to be a partner in an equity company and really taking advantage of growing a business here in Canada? Well, take a listen to today's episode of Money Match. Hey, welcome back to Money Match. It's Ian Ardill here. I am joined together with Darren Krissie, who is the founder and CEO of Skyward. It's such a privilege to have you on the show here today.
Awesome. Thanks, Ian.
Darren, tell me a little bit about yourself. Who are you and what is Skyward?
Okay. Basically, I've been an entrepreneur since I was quite young, had 3 different companies. The latest one I've had is called GT Metal Products. For the last 13 years, it's a steel processing and fabrication business in Western Canada. A few years ago, I decided that there's an incredible opportunity throughout Canada to consolidate some industrial type businesses. And I created Skyward Equity Partners.
That sounds amazing. So tell me a little bit about Skyward. So
Sure.
Give me the elevator pitch of Skyward, because I think it sounds fascinating.
Right. So one of the things that differentiates us from probably many private equity firms is the 3 partners I have in Skyward are all business operators. So I have Jennifer Furnetz that manages sort of office administration and HR. I have Dave Lemoyne that's got extensive experience in business development, integration, and running sales teams, and myself as an operator of a business as well. And so really at the end of the day, what I found is there's this incredible opportunity in Canada to consolidate some really great industrial businesses under an umbrella where we can all operate holistically and integrate and sort of capitalize on what each of us do in the industry and the spaces that we're in. So, for example, in the first 12 months of the fund, we've been able to close on 3 transactions, with our third one just being on December 31st. We're very excited about that. But the first 2 transactions, LA Metal and then GT Metal Products, which was my company, from an integration standpoint, we've already have the sales forces working collaboratively together. There's definitely a crossover of some customers, but there's also this incredible opportunity for these industrial businesses to tap into their each company's intellectual capital, but more importantly, their client base. And that's why we're looking for businesses that have an element of synergies between them in the fund so that these businesses can work collaboratively together. So that's sort of a really high level look at Skyward.
I think you guys have done an amazing job in a very short period of time, from going to being what's called a blind pool, meaning you have a concept or an idea, and creating really quite a bit of momentum in now having, at the time of this recording, 3 businesses owned by Skyward Equity Partners, and it's quite impressive. I think one of the things that I think is really, exciting to be a quote unquote an investor in Skyward is that somebody buying in today, they're buying into cash flowing businesses. It's not just a theoretical idea, but they're jumping into operational businesses that are running and that are cash flow positive. I'm wondering if you can speak to the general operations today, but then I'd love to maybe speak to kind of where you see the trajectory of those operational businesses going.
Okay, so number one, all 3 businesses that we've acquired so far and all the ones that we look at have to be in business for a minimum of, I'm going to say 5 to 20 years, 5 on the very short side. All these 3 businesses have been around for over 20 years. They've seen some very challenging times in the Alberta or Western Canadian market, and they've seen some very successful times. And that's important to us. Again, we're buying businesses that generate cash flow, and we're paying very, very favorable multiples for these businesses, which is really driving the potential return of our fund.
I'll just pause you there just for a second, because oftentimes, people talk a lot about buying the right asset, but what I just heard you say is something really impressive. It's yes, you're looking at great quality companies, but it's also the price tag you pay for that company. And what's really interesting, Darren, is you're talking about buying great businesses for also a great price. Fair?
Yeah. Yeah, we want to, we have sort of a range of multiples within our acquisition criteria. We want to stay within that because that's what's going to drive the 20% plus returns that we're targeting to give to our investors. And what's happened is in the industry today, because interest rates have gone up a fair amount in the last few years, we've seen the valuations of businesses come down a little bit because the use of debt has become more expensive. So really, it's been a favorable attribute for us at Skyward. Looking at businesses where maybe the owners wanted a little bit more a few years ago are now taking a little bit less because interest rates have sort of changed either their mindset or the valuation mindset of people out there.
Awesome. Fantastic. And really what you're kind of alluding to is this multiple game. What's very different from other investment or asset managers that we work with is typically looking at what's called evergreen funds, meaning funds that are ongoing, and investors get on and off, and we see a quarterly change in that NAV. What I think is a little bit different with you guys is that you're trying to buy a very reasonably priced, good quality companies, and really clearly taking it to an exit strategy at a higher multiple. I'm wondering if you can speak to that. And like, what is the exit strategy of Skyward?
So let me sort of explain this very, very briefly at a very high level. Our goal is to make sure we're acquiring businesses around 4.25 times, plus or minus a little bit. And our exit multiple that we used in our model is only 5.5. And for anybody out there that runs their own business and has looked in the transaction marketplace, an exit multiple of 5.5 times is definitely not an exorbitant multiple. It's a very conservative exit multiple. So what we're doing is we're looking at these good businesses. We're using a little bit of debt in a very conservative capital structure so that we can drive returns for our investors. We're buying at the right price, and then we're selling at a slightly higher price. But the multiple that we're using on the exit is not some crazy multiple that a whole bunch of things have to happen in place in order for us to achieve that. So really, at the end of the day, in a lot of cases, even though we're targeting some really great returns for our investors, we're very strategically placed. How do I say this? We're very conservative on the type of acquisitions that we're doing so that we can drive those returns. We're very focused on our acquisition criteria. We don't want to overpay. We're not going to be paying 6 or 7 times for a business, even though individual businesses can sell for that. We're sort of, again, it's a value fund with a really good return on equity because of how we're executing on our model.
Powerful. Darren, thank you. I think one of the things that I find attractive about your structure is the fact that the journey along the process, clients are able to jump in on what's called a limited partnership share, or LP share. So the advantage is that there's a whole bunch of tax attractiveness to it, from the fact that it's all return of capital, and they're not it's a capital gains type structure. And the other thing that's very attractive about it is the fact that it's eliminating the cost of being in an investment trust. When you go into an investment trust structure, oftentimes there's an added layer of cost, right? And so I think the way a client enters into it is attractive. And then all the way along, as the fund progresses, you guys are paying out a cash on cash yield. Fair?
Yes, we have a targeted 5% annual cash distribution, which we call a return of capital, which has more favoritive tax advantages than if it was a coupon payment. Yep. But again, each individual investor needs to check with their own accountant to make sure that all those things are going to work for them. And then, of course, we're targeting over a 20% return over that 5 to 6 years of the fund. One of the things I didn't mention just briefly ago was the fact that this fund does have a timeline. The timeline is 5 to 7 years. It's 5 years with 2 12-month extensions. The reason we added extensions in there was just in case we run into an economic downturn, we don't want to be forced to sell the fund when we can't get maximum value. So really, that's what the extensions are there for. So really, at the end of the day, what you're investing in is a certain period of time where we can generate these great returns for you over that time frame. And we've already proven what we've been able to do in a short period of time.
So Darren, correct me if I'm wrong. This is kind of the strategy. buy good quality companies at reasonable multiples, create synergy between those companies so that they're kind of seeing the maximum results in terms of shared, intellectual capital, shared client bases, shared synergies, and then ultimately then taking that holistic group of companies to a higher exit multiple because they're stronger together on the backside. Is that a
Ian, you
fair
nailed it.
assumption?
Ian, you nailed it.
Okay.
100%. That's exactly what we're doing. And really, from an investor standpoint, looking into the business, I always say there's a couple important things to look at. One, with every fund, there's a model that's sort of created around what their sort of overall strategy is. And me as a business owner selling my own company to Skyward, I believed in that model more than anybody because I've got over $800,000 still invested in Skyward going forward. So I truly believe in what we're doing here and that the model makes total sense to us. So that's number one. The second thing, once the investor understands what the model is and what our sort of outlook is and our plan, is the team of people behind that plan and can they actually execute on that model? And what we've been able to show in the first 12 months going from 0 to 3 acquisitions is that we are able to execute on our model. And because we're operators, we're actively involved in all the businesses that we've acquired so far, and we will continue to be involved because we add value to what those businesses already do.
Darren, thanks so much for sharing that. And it's a fair statement when you just shared there. You're invested. You clearly have quote unquote skin in the game to see a positive exit here. Last question to you, sir. Why Skyward? Why should a client or a prospective client trust you with their capital?
I think one of the key things, there's a few things. One of them, I really want to emphasize again the value structure of our fund. We're generating our target returns are over 20% to our investors over that 5 to 7 year period, but it's not driven by high risk or high growth that we need to see from these businesses. It's driven by the proper purchase price, that acquisition multiple coming in, a very conservative exit multiple, a very conservative use of debt to increase those returns, and some modest growth from each of these businesses being in the low single-digit growth in order to achieve that. So for any investor out there that wants to diversify their portfolio and put some of their money into cash-driven businesses that already generate profit and boost the returns in their portfolio to over that 20% in our market, this is the perfect investment for them. And the fact, what I really like about Skyward is that we're buying businesses that make money. We're buying businesses that are well established in their marketplace. We're really looking strategically and hard at what these businesses are. So we're very confident in being able to give our investors a really good return profile.
Darren, thank you. Thank you for doing a great job of stewarding our clients' capital. Thank you for doing a great job at what you're doing at Skyward. I really appreciate your time today. If you ever have questions or want more information about Skyward, know my door is always open. Thanks for joining me today on Money Match.